Hello everyone and welcome to this special Diwali show, Samvat 2075 Chart Busters with me, Avan Dabash and Siddharth Bhamre. And Siddharth, I really remember that it was not so long ago, felt like it was yesterday, already a year has passed, when we were looking at 10,500 on the screen. But what a year it's been. Certainly no firecrackers for the markets.
Well, it has been a great year, but then,
Somehow,
the correction has set in from higher levels. If you look at, what has happened in the last 4 years, that we had a very great 2014, then we had lackluster 15 and 16. 17 was again a great year. 18 started on a very great note, but then again, this correction set in, and we are exactly where we were, last Samvat. So let's see, probably, next Samvat, a lot of good things are in store.
Absolutely. We have our panel of experts as well who will be walking us through what to expect in the coming year. Joining us today, we have Amisha Vora. We also have Hemang Jani joining in. And on technicals, our very own Dr. C.K. Narayan as well as Kunal Bothra. Thanks so much for being with us. And Amisha, let's start off with respect to the markets and talk about what exactly the outlook is going forward, because there have been so many big events. There have been the macro overhang as well coming in with respect to crude oil prices. We have seen the currency as well on a complete downtick. So what is your outlook on the markets? What do you think it's going to bring for us?
So this year has been very painful for emerging markets across, and India also is very much a part of it. I think while we say the currency has corrected, one of the reasons is oil, but the other important reason is that from world over a lot of dollar went back to US. At the same time, US bond yields started firming up, making it much more attractive currency and debt market as compared to most of the other and emerging markets in particular. So having seen all that, the question still remains, how much of it is in price and how much of it probably could still be seen. So I feel that from perspective of oil and currency, has also added to it the liquidity confidence crisis which has happened post ILFS. A good part of it is in the price, but I can also feel that it is not the very attractive, completely cheap kind of valuations that FII will rush into to buy.
Let's understand, from technicals that what exactly is happening, because this year has made volatility, there has been a comeback of volatility. And CK, what a year it has been so far. Everyone thought the way 2018 started, it would be again a great year like 2017, but things have changed for worse. We are seeing signs of a comeback from market. It's fighting back. But then if I have to see it from 1 year perspective, a lot of events are lined up which would have, probably make or break kind of outcome for markets. How are you seeing on charts from longer term perspective?
Well, at the outset, happy Diwali to everybody and to everyone who's watching us, and also to everybody at ET Now. Now, coming to markets, I think the way things are, we could use some bit of cheer from the markets. And I do believe that 2019 is certainly set to provide us with some amount of cheer. Now, we have historical evidence to back this up. If you look at what the Nifty has done, every time there's been a large drop, and by a large drop I am saying something 15-20% of a drop from the highs. I think every such year has always been followed by a kind of bullish year. 2008, 2009, 13, 14, and then you take 16, 17. Every one of those drops were very big, 8, 13 and 16. And they were all followed by very, very strong years. So 2018 also we have had a very I think January to now kind of dip, so that's about 10 months of decline. So my expectation is that history is on our side. And if you look at long-term cycles, and I look at a variety of long-term cycles, all of them fortunately are actually pointing north. And I have not seen these cycles go too much off the mark across the past maybe 10-15 years that I've been tracking them. So I don't believe there's any reason not to expect that 2019 will be a good year. And I would go out on a limb and say that we can even have a new high at about 13,450.
That's quite interesting, and I won't say aggressive, but yes, the way markets are bouncing and the way money is coming into system, as Amisha also pointed out, especially from domestic participants in form of SIPs and mutual funds. That's quite likely that even if FIs continue to sell, we may not see a major impact as such. Hemang, you have been quite optimistic on market. You have been proposing to buy on dips, and this market has time and again rewarded people who have shown that capability of buying at dips, ignoring the noises and following purely fundamentals. What is your outlook for next 1 year, this Diwali to next Diwali?
Hello everyone. First of all, I wish all the viewers and team ET Now a very happy Diwali, and I hope it brings a lot of cheer and wealth to all market participants. About market, I think we have already seen a correction of about 15% in the large cap and about 30 odd percent in the mid cap and small cap names. And good thing about the factors that gave us this big correction is that there is a bit of a respite when you look at the crude oil price, and more importantly in the quarterly numbers. If you see the initial phase of the numbers which have been out, the top line growth has been quite good. At the broader level it's about 23-24% on a YOY basis. So that should give a lot of comfort and stability. And because you are going to have a very important election schedule, there is going to be a little bit of volatility, but having seen this correction and the macro story getting a little better should give you a hope that things should really settle down over the next couple of quarters. So overall we continue to remain positive from current level from a risk reward point of view. Yes, we cannot rule out the volatility because of domestic events as well as globally the way the things are panning out. But typically if you buy into these corrections, you should be able to kind of create decent wealth over a period of next couple of years.
Volatility is the name of the game, but a fairly bullish projection from Hemang. Now let's talk banks. I don't know, Kunal, if one can bank on banks anymore. There's been a lot of news flow on the fundamental side. Can you just walk us through the kind of movement that we've seen in the Nifty bank as a whole, and what the projection is as well going forward?
So first of all, happy Diwali to all the viewers and to you as well. On the bank Nifty, we started last summer at 24,000 odd levels. We rallied till 28,800. There was a touch and go movement where we were trying to anticipate that whether we will cross that 30,000 mark or not on bank Nifty. But then all of a sudden we had that big fall 2 months back, and then we are now in course of being at par with last summer performance. Now my projection next year is, I believe that this volatility would not just continue, but it might even accentuate because of the kind of global events which we have, local domestic events which we have. So I think one thing is, when I look at charts for indices, for individual banking stocks as well, that this volatility would impact a lot of the large cap stocks as well. And at such times, having a more disciplined approach is a more important approach. So I think the next 1 year, you would not just have extreme amount of volatility, but also a case where the indices might go into a downtrend. So last year was a year where you had indices rallying up first and then heading downwards. This could be a separate year, or maybe a replica of a similar year, that you might have a sharp rally first for the next 3-4 months, and then maybe a process of downtrend coming across. So I believe traders have to position themselves accordingly. I foresee that over the next 1 year, maybe the bank Nifty could even come back, say below that 22,000, 22,500 as well.
Okay, that's the take coming in on the banks. Let's get down to business and chat about some stocks as well that you can look to accumulate that would reap you benefits in the long haul. And I'm going to start off with a name that really raised a lot of eyebrows this year, and that, Amisha, is ICICI Bank. But you're very bullish in the long haul. Take us through what exactly you like about the business. Did you seriously appreciate the kind of earnings growth that we've seen? Question is it sustainable?
I think, all the corporate banks, and particularly ICICI Bank, in last 5 years, if you see, were at a complete receiving end, as some of the very large borrowers were stuck. And if you see, one of the biggest achievement of the Modi government has been to initiate the entire IBC and getting favorable outcomes in some of the very large and sticky accounts. So that has changed the game completely for corporate banks. That is one of the fundamental reasons to look at it. But on the top of it, what has also happened is a lot of growth in the system was captured by NBFCs, and the new management at ICICI, plus the fact that they have one of the best liability franchise, CASA is at almost 50%, and on the top of it very good capital adequacy, will keep them very well poised to now start getting good quality growth in their balance sheet. So I think that growth will return, some of the resolutions will bring interest income back, which will also help their ROA. And if you see the valuation wise, I think it's still at close to 1.5 times FY20 book net of subsidiary valuation. So it is very reasonably priced looking at the kind of franchise that it has created and the kind of scope that it has. So I'm extremely bullish on ICICI Bank.
Yes, it seems like, wars seem to be over for this corporate giant, and we are seeing, Bank Nifty doing pretty well, and one stock which is responsible for that to happen is ICICI Bank. So point well taken over there, Amisha. Hemang, let's discuss L&T. Just a week back, all of us were discussing that how the stock is not performing and has been a major underperformer when it comes to large cap. But quarterly numbers, what a move in L&T. And L&T has been a mirror image for our economy. How are you reading, this quarterly numbers, and what is your opinion? Because you are stating that this stock can completely change its performance for next 1 year. What are you watching? Do you think this quarterly performance which you have seen can be replicated for next 3 quarters as well?
Yes, that in fact in the last about 2-3 quarters we've seen consistent performance with margin stability from L&T, and we have to remember that this entire performance is coming when our economy has not really fired on all cylinders. The large part of the growth that we are seeing in the order flow is driven by the government capex. So we think that in terms of execution and margins, both the management has done exceptionally well. And when we look at the kind of guidance or the outlook that the management has given, particularly the infra, the hydrocarbons and the heavy engineering, these are the areas where the management is sounding extremely confident. And we think that given the kind of guidance which they have given both in terms of order inflow as well as the revenue, they are meeting this guidance. The chances of they are meeting this guidance are extremely high. And particularly when we will see the economy reviving over the next, let's say, couple of quarters, wherein the private sector capex will also start kicking in, I think L&T would do even better than what the management has guided for. So we think that one should definitely look at investing into L&T for 25-30% kind of an upside over the next 12 months.
Okay, there you have it, 2 heavyweights to watch out for. On that note, tell you what, let's take a quick break right here on the show. Do come right back. We'll get you some more crackling stock ideas as well as outlook for individual sectors.
Hello and welcome back. You're watching Chartbuster Show, a Diwali special show where we are in conversation with Amisha Vora, Hemang Jani, CK Narayan and Kunal Botra, and we are digging out cracker of stocks from them so that you can make more money from this Diwali to next Diwali. We took some ideas from fundamental experts. Now it's turn for technical picks. CK, we have seen a lot of stocks doing pretty well even in falling market. And if we look at some of the mid-cap names, they have been outperforming even in this fall. Is your orientation more towards mid-cap from this Diwali to next Diwali? 2 stock for our viewers.
Well, I think, something along mid-caps will probably create a little more momentum. And right now what this market really needs is some sort of upside momentum. Now for that, finding stocks which have kind of weathered this fall, that would be appropriate, and the other would be where a trend is being essayed right now, and it is within this fall was part of the correction. So the 2 stocks I have are from such a perspective. First one, Aurobindo Pharma. I think that's been one of the steadiest of the stocks within the pharma pack. It's not really kind of risen along with all the rest of the pack, but I think the kind of pattern it is making on the long-term charts is very, very solid. My belief is that the corrective pattern is now completed and a fresh upside move is being essayed right now. Fundamentally, the stock has lots to go for it, and particularly I think the recent acquisition they made, if that were to come good, I think that could be a complete game changer for Aurobindo, and the charts are reflecting that. My expectation is that in this Samvad, the coming Samvad, we should reach about 1000 to 1100, which means about 30% higher from where we are today. The second stock that I'm looking at is Havells India, where some very, very firm trends are going on. Here too, there have been lots of things which have happened in Havells. Yes, along with the rest of the market, that too has fallen. But I'm treating this fall that we have had in this year as being part of the correction. And we have positive reversal patterns on the momentum charts. We have very good trendline supports. We got, excellent patterns. We got now starting confirmations that the correction is over. So I would expect Havells to resume its support path. I think a price target across 1 year about 840. So that's about 25% plus from where we are today.
Kunal, you have been quite optimistic on market, generating more buy calls now. In fact, I see that you have given your favorite stocks as a buy stocks, because last few trading sessions I have been seeing you giving a lot of buy calls when it comes to Praj Industry and PFC. What's happening in these two names? Because at least PFC, I can say that there was a huge correction, and now that correction seemed to be getting over. But is this a durable trend in PFC which would last not just for weeks and months, probably for a year?
So on the daily shows, we recommend all chotu targets. But for the Diwali Chartbuster show, I've recommended a very big target for names like Praj Industries and PFC. I think one has to understand, when I look at Praj Industries, it's a 10-year consolidation which you're looking at on the charts. The volumes in the last 3 months have been aggressively very high. Look at the stock recovering from 70-75 levels to now 100-110 odd levels, and it goes to show that the flow for the charts and the volumes now coming back into Praj Industries is indicating that this breakout is happening for the stock in the very near term. So I believe Praj Industries should be a breakout candidate, and in that regards I've kept a target of closer to 150 on the stock, stop loss at around 85. And PFC, we've been discussing this stock on and off on daily shows as well. Bullish RSI divergence setups. The last time the stock has given such kind of setups, the stock has more than doubled in a span of 1.5 odd years, and I'm expecting a similar kind of return. So October was extremely positive for PFC, but I believe that this October positivity should trickle over the next 6 months to 12 months as well. 140 is where I have placed the targets for PFC, stop loss at 70.
Okay, there you have it. No chotu targets, just the cracker targets that you can watch out for his favorite stocks. That is what Kunal is recommending. Well, Amisha, let's understand the rationale behind the next two stocks. You've picked out a Nestle, and the buzzword on the street really from most market men has been that consumption is the way to go. So let's talk about Nestle in specific. It's been strong domestic sales. Volume growth has been very steady. What are the key triggers? Where do you see the stock headed? And the next one you have is Heidelberg Cement. The management has been very optimistic on cement demand going forward. Why are you handpicking Heidelberg among the lot of the other mid-cap cement names?
Heidelberg in particular is from the middle of India, that is in MP, and that is the package or the area where the demand supply is very tightly balanced. So we think that will be a key advantage. At the same time, a lot of infrastructure as well as middle income and low income housing projects of governments are ordered, and it's been on, so that all will aid the demand substantially. Heidelberg has been working on their cost structures a lot, so their cost is very well managed. So we think that from FY18 to FY20 the earnings has potential to almost double. Stock has corrected, at the same time it's high grade management, so we thought this is looking very attractive. But even overall, after say next 3 to 6 months time, which could be still very dull because of whatever liquidity crisis, NBFC slowing down and real estate slowing down, overall if one takes a 2.5 years view, then I think the demand supply in cement will be very much tight, as new capacities are very limited, which is coming even across India wise, and 3 to 6 months pain, and I think cement as a sector also should do very well. But in particular Heidelberg even now is very well positioned with its capacity in middle of India. So apart from the fact that Nestle is a consumption story, extremely good management, they are very pro India business focused at the moment, and if you see in last couple of quarters, and their pipeline of new India specific product and brand variations that they are launching is huge. and the success rate is fairly good. So we think that the momentum in their top line growth as well as bottom line growth in next 2 years will be much better than what it was in last 2-3 years. And this is, as what everybody knows, one of the very good pedigree. So as I am little cautious in the market, I would stick to very good pedigree companies, and that's how also Nestle features as one of my other top pick.
Okay, top Diwali picks from Amisha Vora there, Nestle, and talking about a Heidelberg cement as well. Hemang, let's take it across to you. And of course, I don't think any of our shows are complete if we don't mention the behemoth from the oil and gas space, and that's Reliance Industries. And when you think of that, it's of course RelGeo that comes to mind, the solid disruption that it's done in telecom, as well as now with respect to the DTH and cable business with RelGeo Gigafiber, and they're very optimistic on those plans. Talk about all of the businesses. What's the target price that you have in the long haul? And Amisha flagged off ICICI Bank as a very promising stock, and it's your Diwali bet as well.
Yeah, absolutely, Avan. For Reliance, our take is that the core, the refining and the petchem, we are seeing a decent amount of traction happening, particularly the way the company has gone on stream on ROGC and the petcoke gasification. That should give them a fair bit of momentum on the core business part, and the way the company has gone about achieving traction on the retail part of it, and the telecom business, the way it's shaping up is extremely good, and we think that there is going to be a lot of unlocking opportunities on those two newer businesses. So though the stock has done pretty well, the earnings momentum is giving you an indication that there is more to come, so there is going to be a fair bit of traction over there. And as far as ICICI Bank is concerned, I think the fact that most of the concerns relating to asset quality, the management overhang are behind them, company has a good franchise, and more importantly the recent developments where there is a bit of a liquidity crunch. So the banks who have a slightly better CASA and the liability franchise are better placed to take advantage of this phase. And bank is relatively cheap, so we think that you would see outperformance coming from some of the corporate lenders versus some of the retail focused private sector banks. So ICICI Bank clearly stands out there.
On that note, gentlemen, would like to take time out to thank you as well as Hemang and Amisha for joining in on this very special edition. And here's wishing everyone who's watching a very happy Diwali from Team ET Now. May there be a lot of sparkle to your portfolio in the coming year.